Hey guys, lately the cryptocurrency market has been surprising us more and more. BTC reached $45,000, a record high last year, and the total capitalization of market volume is also growing at an unrealistic rate. What is this? A common manipulation of the market and investors before the introduction of Bitcoin ETFs? Or the beginning of a bull market? Why is everyone looking forward to the 10th of January? Let's find out now. Before we get into the analysis of the ETF situation, I would like to explain what they are and why we need them. But first, subscribe to the channel and like this video so that you don't miss any more important videos about this booming market. So, Bitcoin ETFs are basically a bridge that connects the world of traditional finance and cryptocurrency. This technology makes it possible to wrap Bitcoin, which is incomprehensible to ordinary investors, into securities they are already familiar with. This greatly simplifies the investment process. In fact, Bitcoin ETFs solve several issues and problems at once. Number one, the complexity of buying and storing BTC. Currently, BTC can be bought on various cryptocurrency exchanges and OTCs, and for many people, this does not seem to be a very reliable means of investment, and many do not even know about the existence of such platforms. After the introduction of ETFs, anyone will be able to buy the asset with the help of brokers or traditional international exchanges. Number two, lack of clear regulation. Cryptocurrencies are a relatively new type of asset, the regulation of which is just beginning to gain momentum and is a very difficult and ambiguous issue. At the same time, Bitcoin ETFs clearly regulate the procedure for the issuance, circulation, and redemption as established by law and the issuer, which means that investors will receive more guarantees and clarity than in direct interaction with Bitcoin. Number three, low level of security. Since the custody of the underlying asset is entrusted to a professional custodian, the buyer of an ETF does not need to think about protecting his wallet from fraud schemes common in crypto. Of course, Bitcoin ETFs will bring a breath of fresh air to the market, but is it really that simple and clear? Actually, no. So I propose to move on to consider the negative and positive consequences that we may see after accepting applications for a spot BTC ETF. One of the most important consequences of the introduction of Bitcoin ETFs is the influx of fresh capital from exchange-traded funds and eventually retail investors, but the launch of a spot fund can have both positive and negative effects on the market. Let's take a closer look at the pros and cons for the cryptocurrency market, starting with the disadvantages. Number one, concentration of assets and increased risk of manipulation. Although the inflow of investments comes from retail investors, the fund itself accumulates a huge capital and volume of spot assets, which creates the prerequisites for market manipulation. Number two, low awareness of potential investors. People who do not understand the basics of cryptocurrencies and the peculiarities of the crypto market will be able to invest through ETFs. This may lead to an incorrect assessment of the risk-reward ratio. In fact, these two disadvantages may be enough. Just remember how your friends or relatives who are not involved in crypto wanted to buy BTC when it was worth $60,000. Or maybe you bought BTC yourself at the end of 2021. But that's not all. I see one more disadvantage of ETFs. Number three, investing through an intermediary. Buyers of Bitcoin ETFs will invest in BTC, but will not hold it or use it for transactions. The fund will be able to manage the portfolio as it sees fit. But of course, it's not all bad, and this technology has a number of advantages that will potentially improve the market. And a good example of this is the situation with the introduction of gold ETFs. Gold ETFs were introduced in 2004. At that time, the price of gold was $400. In 20 years, the price has increased 5 times and reached a capitalization of $13 trillion. The capitalization of Bitcoin is now $828 billion, which is 14 times less than gold. In general, I expect Bitcoin to repeat a similar scenario to gold. Once Bitcoin ETFs are accepted, the price may drop 10 to 20% on the same day, but within a year, it will rise and only continue to grow. Note that some enthusiasm and $20 to $30 billion inflows via institutional Bitcoin products could provide a significant boost to Bitcoin, given 1, a relatively low Bitcoin float, strong hands, long-term holders, and 2, systematic scarcity due to halving schedules. Although it is difficult to decide in advance whether it is a positive or negative development, I believe that Bitcoin ETFs will bring much more benefits in the long run. After all, it will be followed by ETH, Sol ETF, and other popular assets, which will be a very good popularization of cryptocurrencies. The main question will be how to bring all ETF investors to the standard use of cryptocurrency technologies. Recently, I saw a rather interesting interview with CBOE Digital President John Palmer. He is confident that after the approval of spot BTC ETFs, a new wave of institutional investments, including pensions, will appear. And it's interesting because when you hear things like this on TV and from such high-profile people, you realize that the massacre is near. But I think many of you are wondering when the Bitcoin ETF will be approved. So let's take a look at the latest news and facts about the acceptance of applications and make our own prediction. Lately, the topic of application acceptance has been very popular. And this is not surprising because the market is in a very active phase. It is waiting for positive news. It is waiting for a pump. Just remember the excitement on the market when we saw the fake news from Cointelegraph. First, cryptocurrencies showed rapid growth, and then, well, let's not talk about the bad stuff. But that's not what we're talking about now. According to many analysts, we will see the acceptance of applications on January 8 to 10, and this is just one of the many articles, interviews, and other tools through which well-known investment figures have expressed their opinions on the acceptance of applications. It's all very exciting, and I'm inclined to believe that we'll see ETF approval soon enough, but is it really that clear-cut? Let's not forget that we're all dealing with the SEC and its not-so-good CEO Gary Gensler right now. They love to manipulate big companies like BlackRock and ARK Invest. In fact, the regulator has made changes that require any application for a Bitcoin ETF to be adjusted. Now, each BTC for a Bitcoin ETF will be purchased with cash, which will reduce the risk of manipulation. For example, BlackRock bought BTC a long time ago at a price of $4,000. The company will not be able to use the same BTC for ETFs because each asset must be purchased with cash. This effectively blocks the ability of large corporations to make billions on the exchange rate difference alone. By the way, while researching information for this video, I came across some interesting facts about BlackRock. Recently, BlackRock named JP Morgan as an authorized participant for its spot Bitcoin, although earlier JP Morgan CEO Jamie Dimon wanted to close Bitcoin. To be honest, this is hilarious, but that's not the point. Let's get back to the issue of accepting applications. In my opinion, it is very likely that we will see positive responses to them this month. But it is important not to forget that everything can be repeated 10 times, and the SEC will find another reason to reject or postpone the decision on this issue. So let's find out when we will see new all-time highs and what we can expect from BTC in the near future. It's no secret that the bear market is coming to an end or has already ended. So we will see new highs for all crypto assets in the coming years. But many people are wondering when we will see this and if the launch of Bitcoin ETFs will be the starting point. In my opinion, pumping of the market before the introduction of Bitcoin ETFs is a very classic manipulation. The market is growing, ETF adoption is constantly in the news, people are expecting an even bigger pump. But what can we actually see on the back of the acceptance news? In my opinion, we will see an approach or even a break of the resistance level at 50,000 and a price pullback. First of all, 50,000 is a very clear and understandable psychological mark, and even those who bought BTC in September 2023 will have more than 2x profit. Just think about it, 100% profit on Bitcoin in just 4 months. Of course, people will start selling BTC very actively. Second, no matter how many positive effects Bitcoin ETFs bring, the full impact can only be felt in the medium and long term. That's my forecast for the coming months. By the way, some smart whales think the same way. They just predict the future of the market and always get away with it. But if we look at a longer period of time, I think 2024 will be phenomenal for positive news, which in turn will allow us to see new heights for BTC and altcoins. This year, we will see the halving of Bitcoin, which is a very positive phenomenon for BTC. Historically, after each halving, we see this asset rise to new all-time highs. You can see a clear similarity each time it takes about 520 to 530 days from the moment of the halving. According to this logic, we will see the next all-time high at the end of 2025. But I think it will happen much sooner. There are a lot of factors this year. One of them is the Bitcoin ETF, and it will definitely bear positive fruit in 2024. And it's only the beginning of the year, and some reputable analyst teams have the same opinion. For example, Coinbase has predicted that we will see new all-time highs in the second quarter of this year. So we just have to wait and monitor the market. But I want to remind you that this video is not a financial recommendation, just my vision and understanding of the market. Subscribe to the channel to not miss the growth of coins. Thanks for watching. Your Coin Post.